Good morning. You listen to FloorAlley.net, and I'm Kemp Harr. This morning, my guest is Bruce Zwicker, an industry consultant and student of the business. Bruce, how you doing?
I'm doing great, Kemp. How are you?
I'm good. I've caught you over in the United Kingdom. So I wanted to run through some of the publicly traded companies' results and a couple other big news items in the industry. First, just a little bit about you. I know you've been doing an interim CEO gig with Du Chateau, which is based in California, and that just ended, right?
Yes, that was about 4-ish months, and we had to terminate a CEO, find a new CEO, and I held a seat, but that's all done. Most of my time now is spent with International Design Group, which is a portfolio company. It's called IDG, Mill Point Capital out of New York, where I'm the executive vice chair. We own Canco's Tile, and we own Construction Resources in Atlanta. It's a rather large, growing company as we make more acquisitions. And then I've got a project over here, and I've got another one over in the North America as well. So keeping busy.
All right. Let's run through some of these earnings reports. So the most recent Lumber Liquidators, most of their business, obviously a lot of it's hardwood, but they're also in all types of hard surface products. They focus mostly with retail replacement and builder, and their sales down 21% for Q2 and 18% for the first half, right?
They cited, we'll probably talk about it, LVT and their difficulties with LVT, but they said they lost $10 million worth of sales in the second quarter. And I think they've got about $500,000 in legal fees that they're ringing up. And for the full year, it's cost them about $5.3 million. You think about all the demurrage and all the extra costs. So, yeah, it was a tough quarter, and they closed one store as well.
Right. Next, and not in any particular order, but Mohawk, their second quarter sales were down 6.4% globally. And for Flooring North America, which is centered around where we focus, it was down almost 9% for the quarter, right?
Yeah, and if you exclude acquisitions and kind of think of it on a comp basis, they were down in total almost 10%, 9.6 in total. In North America, a little bit over 12. Yeah, I mean, it's tough. And, of course, they've got rest of the world, which is down 10%. Obviously, Europe is killing them, as is killing everyone. And the guidance was lower. Their EPS guidance for the rest of the year is lower than what the street was thinking. And we've seen that at Floor & Decor. The guidance is going down.
Yeah, and Mohawk ended at a $35 million cost reduction item that they're working on that should kick in as soon as they do it. So I guess we'll hear more about that.
Right.
Interface, which is more focused on the commercial side, their sales for the Q2 were down 5%. And within the first half, they're down 1.5%. So as we all know, there's more energy, more demand on the commercial side of the business.
Yeah, and they cited education as a real strong suit for them. Their units were down a lot more than their sales, so they're still living on some price. They said quarter three they predicted being between flat to, maybe a +2, +1. So I don't know. It's a big step up from being a minus, and I think quarter three last year was a pretty good quarter for them, so we'll see.
Well, you mentioned a good point we need to bring out is that these companies comp against the previous year. The
Correct.
Second half of last year was weaker, especially on the residential side. As we start looking at what residential replacement, some people say the first half of residential replacement overall industry-wide was down double digits. But in the second half, it's comping against weaker numbers, right?
Absolutely. Everyone's going to look a little smarter in the second half.
Yeah, okay. All right, let's go to Dixie. Dixie's second quarter down 11.6%. And for the first half, down 12.5%, and still in the negative on earnings. But it was interesting to hear Dan Frierson say that I think it was July that they were comping over last year.
Yeah, and they talked about they think they were gaining share. And of course, they see the the reports, the industry reports, so they know that. And LVT's in there someplace, so probably boosted things a bit, one would guess. But yeah, I mean, 11% down for them is not bad, in the scheme of things.
All right, so Floor & Decor, you mentioned them earlier. Sales up 4.2% in Q2 and up 6.6% in the first half. So they're on the positive side, playing mostly in the ceramic tile market, on the hard surface business, no carpet business.
Their same-store sales were down 6%. First quarter was down 3%. So I look at same stores. I never look at total. And their guidance last quarter was someplace the year would be between 0 and up 3%. And now they're looking at something worse than that. July was down 8.4%. So they did give the number on July. It was worse than what they saw in the second quarter. But again, they're going to lap on the comp basis. They're going to lap. They're also delaying some stores. And that was very predictable. I mean, they were kind of signaling that in the first quarter. So some of those stores are going to get pushed out, and they'll have to pick up steam if they want to get 20% new stores per year. All that is, prudent and expected. No surprises there.
All right, a couple of little things. We have a lead story today on Floor Daily about the customs holding up LVT shipments out of Asia. Yeah, we've been tracking that for a while. It's called UFLPA, Uyghur Forced Labor Protection Act. We got a good estimate. They've either turned around or held up roughly $200 million worth of LVT product at wholesale value. The big issue is that U.S. Customs and Border Protection, they're not giving the importers any kind of information about those manufacturers that are suspect. So it seems almost like roulette. I direct the listeners to take a look at that article.
It's a complete mess, and you just look at lumber liquidators and they hit to them, and they're not a huge player in the market. $200 million is ridiculous. I heard that the number of suppliers who are being added to the list is growing, not shrinking. And as you say, the guidance in order for companies to extricate themselves for this is ridiculous. I've heard some shipments are going back rather than paying demurrage. It's incredibly costly, and it's hitting the retail level. So customers can't quite get what they want. So it's a mess. We talked about this back at Surfaces, and it's messier than maybe we all thought it would be.
Okay, listen, a couple more items before we run out of time. The HD Supply, which is a division of Home Depot, buying ready carpet, that's huge. When you start looking at the multifamily carpet replacement business, they're giant. They're number 11 on our top 100 list, around $450 million in sales. And, they're part of the SCI group, and it's going to be interesting to see. Home Depot doesn't really belong in a buying group. We'll see what happens there, but that's going to be watched. Another one real quick, just to mention, this terms on carpets going to net 30. This attempt was made in 2017. I think Mohawk led that. This one's being led by Shaw. It just seems like if the two companies move at the same time, it'd probably be easier. It's going to be one to watch, right?
Yeah, they got to be careful about how they move together, obviously. But I suspect that'll iron itself out. On the HD Supply, I think it's a signal they've got some cash. They're going to be making some moves in this multifamily segment, so they're on the move.
All right, Bruce. Well, I appreciate you spending time with us and helping me get through this news again. But talking to Bruce Zwicker, an industry consultant, and you've been listening to Kemp Harr and FloorDaily.net.